Welcome back to episode number 18 of the Income Insights podcast. I'm your host, Denny Neidhardt, and alongside me, we got Income CEO Lavrenti Tsudakov. Today, we want to summarize the most important events that have happened in 2025, and of course, provide also an outlook in terms of 2026 and what investors can expect from the platform. All right, Lavrenti, thanks for joining me. We're now 3 weeks in 2026. Did you have some good first weeks of the new year?
Hello, Denny, and everyone. Super active weeks. Last year, I had a plan to finalize the most burning stuff, but still quite a lot of stuff to do, quite a lot of stuff to prepare. And I like all the things we're going to implement this year. So I look pretty positive what's like coming.
Are you a guy for New Year's resolutions, whether it's, for private life or business aspects?
And to be honest, no. There is a little bit another scheme how I do. For the year, I just have a plan, what should be done in numbers, in tasks, let's call it like that. I mean, in private life and everything. And I just make a copy and improve numbers or increase them if I achieve the previous ones. And it's not like I start going to gym from the 1st of January. It's just I continue going to gym, and I would like to have this bench press, for example. Slightly easier. You don't have to sit the whole day thinking what to do. Just copy, improve the results, and think, okay, larger teams probably will be those, but to some extent, not just promises to myself. It's a plan.
And are you then a guy that's, has quite tangible numbers or let's say tangible targets that you can really follow up then? Or is it rather vague and, I would like to go more to the gym? Or are you okay, next year bench press 100 kilo?
Exactly. Those are all precise numbers. So minimum amount of trainings is that, the bench press is that, and the same for the company. I believe it's much easier, than to have some undefined things. You can track, you can compare, and can make conclusions like why I fail or why I succeed.
All right. Sounds good. Yeah, we will talk more about targets then when we come to the outlook for 2026. For now, we want to recap a couple of highlights, specifically then for the platform, of course, and how income performed last year. There's a common tradition, so to say, in this kind of New Year's podcast episodes. I used to do it with Kimmo twice now in the past. I'm always asking at the beginning how you would perform, how you would assess the performance of income from the previous year on a scale from 1 to 10, whereas 10 is the best. Now, I can already reveal the numbers for the previous year. So 23, Kimmo gave 7 out of 10. And for 24, he gave 8.5 out of 10. Now it's your call to decide for 2025. How would you assess the performance of the marketplace?
Probably I will be a bit more grumpy and strict. Mine will be 7 because in some things performance could be better. We had some plans, we had some promises. I will keep 7.
Can you maybe elaborate a bit on, what you liked about the previous year? What have been your highlights, and why did you deduct points? Where did you see you lost out maybe on opportunities?
Yes, absolutely. My the overall conclusion for the previous year is that it was the best year for the company in quite many cases. So this is the positive side for sure.
Strategically, can you be more specific?
Yeah. I will jump to that for sure. Strategically, we decided that it should be year for a really solid foundation. We had a lot of complaints that supply could be better, that cash drag is here, that loan originators are sometimes listing and not listing. For sure, you cannot have a solid growth without supply. The first thing which was changed, I found a new guy who is replacing the previous one. And that was the first year of Igor, who is the new loan originator's onboarding manager. We changed the process, we changed all the material, we changed the approach, and I can say that it was a really successful year for the onboarding. Yes, from one perspective, we did not achieve our internal target. From another side, we found really good quality loan originators. We reshuffled the process in a way that currently the onboarding funnel having guys which were not even accessible for us before. The next two loan originators, I guess, will be really good ones. And that's the reason why it took so much time. There are a lot of counterparties, schema is stuck with the legal part. So the first thing, I was projecting the assets under management by the end of the year, like 30, 35 million, and now we're at 25. Still, compared to 2024, it's like a 30% growth, which is nice, but still lower than planned. And yes, points are going there. I mean, minus points. There are really adequate reasons for that. First of all, Dana Rupia. They are still decreasing their portfolio from 6.5 million to nearly 2, slightly less. Additionally, Hovi and iBank are both loan originators are nicely overfunded, not with us. They have, of course, alternatives. They're using slightly cheaper funding. But I know that those facilities are like not infinite. Someday they will end. And the indication that, for example, iBank this year should be back, I mean, with the larger listings. From another side, I believe it was a really good test. I'm not like super happy to have it now, but let it be. Meaning that some loan originators were not listing or decreasing portfolios, but if you check the statistics, we were not falling at all. And having revenue like tied to assets under management and seeing that it is not falling, it's a really, really positive and good test, meaning that we have sufficient amount of investors and loan originators, and they can absorb falling of some and still like investing more, or at least to keep it stable. That's the biggest thing why I put minus points. And another thing, I see a lot of complaints, of course, from the investors, so that platform stability could be slightly better. I mean, purely technical, performance-wise. It was not significantly improved. We updated it twice. At least it did not become worse. But this year, for sure, it should be dedicated some time to make it much better, because I as an investor also hate some days when you see this loading and loading and loading. It should not be there.
All right. Sounds good. That was like a quite comprehensive explanation, and you brought up already a lot of points that we can touch base on now. Maybe to start off, I was wondering, the balance between expectations and reality. Like for instance, Dana Rupia, was this, let's say, to some extent, a foreseeable development that they would decrease their exposure on income? What have been events, let's say, in the beginning of the past that you had maybe a different outlook, a different expectation moving into 2025, and where reality kicked in at one point that punished you in a way and said like, look, it's going to be a bit different this time around? What have been the events that would you consider like went a bit different than anticipated in advance?
Starting from the beginning of your question, those things unfortunately cannot be foreseen, because we have regulations, we have different markets which are impacting quite a lot of stuff. My projections went in the pitch deck, and as you see, we are not there. Of course, we have quarterly meetings with all the loan originators to understand what's the forecast, what's the demand, and I put all those things into the plans. But again, different things happen. Sometimes they receive better offers and not taking all the funding from us. So those things, from one perspective, can be, of course, considered that it did not happen as planned. From another side, we always try to have plan B and C, and we know what to do if it is not happening. Then another thing is the funding round. From one perspective, I would say that it was really good. Because we collected funds for the current developments. So we have now possibility to improve some things in 2026. I believe we will jump there a bit later. From another side, Seed Blink, I was expecting slightly more. They exceeded, and thanks to everyone, that's not a problem. They exceeded the minimum, which was acceptable for me, going more like to the normal level, but I was hoping it will be slightly better, which is again totally fine. Yes, I would say that those are two biggest things. But the main thing that if something is happening, the most important and the major thing is that it is controlled happening. You know what to do. You're not panicking. You have some supportive plans, and still you can execute and proceed forward.
Mm. All right, interesting. Um, Obviously, you being in operational charge at Income, I was wondering, there's always like the outside perspective from investors. There's like this uncomfortable, repetitive question maybe at times, but you got also the inside perspective, and something that collides, or where a knowledge gap maybe comes between what investors can see and what you actually experience from the inside. Um, what would you say have been internal changes that you have that you went through in 2025 that maybe haven't been that noticed from the outside perspective, but something you would consider that made a significant improvement for the operational side on or at Income?
Mm-hmm. Quite several, I would say. The first of them will be institutional side of the platform as such. I know that this is mainly invisible for everyone, and the previous year was the first trial to have like one serious institutional investor and to see how we fit the process, because those guys have much stricter requirements towards us as a platform. They have expectations that there are real people answering questions. I mean, not some signing forms or chatbots, but real people helping on a daily basis. Of course, legal part, it should be rock solid. Performance of the loan originators, which are offered to the platform, quite a lot of everything. And I would say that that thing took quite a lot of effort and quite a lot of time. Now we have special functionality for them. We have some reporting, and it works really well. The portfolio is also pretty significant. I mean, comparing to the overall assets under management, I would say that that's a successful one. But for sure, you do not see that. All the listings are happening on the background for them. They are not mixed with the retail market, not to interfere anyone. Then the second thing I would say is the.
Can I just, sorry, can I?
Yes, for sure, please.
I would like to jump in on this for a second, because like, to which extent do you see like this is providing then the benefit? Is it the perspective of, look, we got a solid business at hand and proper investors are also willing to deploy their funds at our marketplace? So it's like the proof of concept that there is, you have a serious business at hand, so to say. Or is it more like, look, for the future, if we can bring volume accordingly, those investors might, with bigger pockets, will help us to grow at one point even further, when we can also enable or provide sufficient supply then to grow the platform. So maybe you can go more into detail here.
Yeah. Think actually this is a really good question. From one perspective, this is the one of the strategic goals for the next and upcoming years, to prove to other guys that we are, as a platform, we provide a lot for them. I mean, really granular data, the performance, the legal part, because although those things are generated in the system. Then the second one would be the good selection and good exposure, that the products are good and they would like to have it. For sure, we will see it as a significant part of the platform. Not sure it will like overcome the retail part, but it will be a separate stream for the bigger guys when they will find a good place to allocate like larger sums. Now we already have preliminary discussions with such guys to understand like what's the expectation there. We are pretty well matching that already. Before it was told that guys, you are too small, you are too young on the market, like the trust is not here. I see it's not a question anymore. Now we just need to understand is there anything else missing, and if not, we just need to match again. It's slightly different profile of the loan originator, probably to some extent. They're expecting, of course, the larger tickets. From another side, as always, we need to find the balance. And personally, I would like to see the both sides growing and supporting each other.
And That's an interesting point. The loan originator side, to get them into the conversation or into the mix as well. How targeted are those institutional investors about individual lenders? Is it something that, probably to some extent they see income as, being the cutting edge in between? Maybe there's opportunities for them to, to go to those companies directly and work out collaborations. I don't know to which extent maybe, but how tailored is the approach to target, let's say, specific lenders, and who are the ones that are more in focus for them, if that's the case?
That was really interesting. I was also thinking it's much easier and probably profitable going directly to the lender asking like, "Hi guys, we would like to invest 1 million into your product. Let's do that." But again, you see quite a lot of institutionals and family offices as well. Institutionals, of course, they are regulated, they have license, and they have all the regulatory requirements of what they should report. And we as a technology provider giving quite a lot. All the agreements are generated in the system, like zero hassle. All the data on the each repayment and schedules and loan level is present. So it's really easy to analyze and to understand and to report performance, which is expected from them. So technologically wise, it's much easier to go to us than to link yourself to the loan originator. We as a marketplace have a really good opportunity to say that, hey, we have, I don't know, 5 loan originators, but the data is normalized, everything is generated and done in the system, and you don't need to do anything. You just register, deposit funds, and all this pain is taken on us. So heavy lifting is already done. Of course, they are doing separate due diligence. They are not allowed to reutilize ours, but still much easier. And the family offices, those guys sometimes like doing quite a lot of stuff in Excels. And comparing Excel versus ready-made system, I believe it's not a question. What's easier and what's faster?
Mm. And then do they target specific lenders and say, look...
Yes. Sorry, I forgot about this part of the question. For sure. For them, it's a huge difference, at least what I see now, that the location of the loan originator is super important. What's the market there? Then financial performance. And since we anyway collect all the financial data, we can already provide that that's the situation, that's how it looks. Of course, performance of the loan book. And we can demonstrate that that's the historical performance, that's the repayments rate, that's default rate. For them, it's much easier to have the first outlook to understand like which loan originator looks best or worse. Now, of course, we did not go wild like offering everything to everyone. It was like a trial year. But I can say that more than one loan originator is used by institutionals, and everyone are so far happy. I really hope it will remain the same, but it works really well.
For which lenders do you see the biggest demand?
Ibankar, that's for sure. That's the biggest one.
Can you maybe, from the conversations you have with institutional investors, reveal what makes them so appealing as opposed to the others?
Really good performance. Product is good. Interest rate is competitive, and I must admit that institutionals are not running all the time for the highest interest rate. They prefer the balance, risk reward balance. For them, like 11, 20, 10 is totally fine. The loan originator is solid. So solid company, really good guarantees. Okay, there is a risk there, but still they understand that it should perform if everything goes well.
So as opposed to, let's say, normal retail investors, there's, let's say, the expectations in terms of the interest rate is slightly lower. It's less, a key criteria, because I remember firsthand that I'm also struggling to see, like, I love Ibanka. I would love to have a bigger exposure, but then again, I see like 9.5%, and I'm like, come on, just give it this 0.5%, make it 10, and we have a deal. But they have been quite consistently below 10% throughout last year. So, but this is apparently a different thinking than when we talk about institutionals.
Absolutely, yes. And I understand your feeling and other investors as well. But as always, that's the question of balance. When the loan originator sees that they need to move faster, they will increase the interest rate. You will see for sure listings like with 7% as well. And I believe this is opportunistic listing, let's call it like that. If it will be grabbed, good. If not, then it's not a tragedy. But when the growth pressure will be here, we will see higher interest rate. Plus, I believe this is always cycles on the market. We always see like interest rate is decreasing, then increasing. I mean, for everyone. And now we're here. I don't see it's like a big problem. Of course, I would like to see it higher. It's easier to promote. But from another side, we are not taking any random loan originator from the market, and we can supplement the lower interest rate with a good performance of the company, of loans, of good process of enforcing, and etc., etc., etc. Quite a lot of that. Uh, Personally, I'm not the investor who is running for the highest interest rate. I prefer more stability and more like to sleep better. Let's call it like that.
Now it's a good transition to tackle more the also the new lenders that you have onboarded, but maybe you want to continue after I broke your rhythm 10 minutes ago about the internal changes that went unnoticed from the outside. Is there anything else that you would like to add in this regard?
Yes, yes, yes. Probably I'm talking too much as well, and the flow is flying too far away. Institutional side, for sure. Then the process of the onboarding loan originators, as I said, it also was reversed, and you don't see that for sure. The potential negative side, which you see that is we did not onboard lately any new loan originators. But as I said, we are in the process of finalizing legal documentation for two really big ones, and I would like to see them like a new potential anchor loan originators as the Naruto used to be. So for sure, for the investor, it was not able to see. And the third thing which I would like to stress out is internal discipline of measuring stuff. For example, we started to measure in the many more details marketing side, all the partners, affiliates, networks, each channel is tracked and calculated. And probably this thing was more or less visible from the pitch deck perspective. We put a lot of numbers, and it was not huge effort to generate all those numbers because they are a part of the process. And for me, this is for others as well, for sure. This is a really good thing to make conclusions. Now we have super detailed evidence of our like hypothesis, is it working or not, and we can make all the conclusions looking at numbers, not just okay. We never were working on gut feeling. That's a little bit stupid. But now we like went to the next level of granularity, and it helps a lot. So I would say that those three things.
Yeah, if you can't measure it, it doesn't exist.
Exactly.
Saying that I picked up some time ago. All right. Well, now that you mentioned the new lender onboarding process a couple times, maybe it's convenient to look at the newcomers that have joined in 2025, just to quickly list them and with their currently outstanding portfolio. I had a look this morning. We got Autofino, 570K. We got Simpleros. I always have the tendency to try to make the Spanish accent when I talk about their name. 220K and Virtus Lending 3.8 million. So overall, that's a total of roughly 4.5 million. So yeah, that's good. 20% maybe of your current portfolio. So quite a decent impact considering that all of them have joined throughout 2025. How do we want to tackle it? Maybe for me, interesting aspect is when you talk about those individual lenders, of course, the profile can be reviewed online, but maybe from your insight, from your background perspective, maybe some context as far as how the onboarding process went, which new lending companies have been let's say, easier and more smooth to onboard? Where did you spend a lot of time to bring them to the platform? Maybe some insights that, investors, probably don't really see from their outside perspective that would give a bit more context to those newcomers.
Sure, sure. As always, the selection is pretty wide on the market. So, for us, the first thing is always to understand who is the first one, who is the next one, and we have quite a lot of loan originators pending as well. And our selection, the first thing we tried to pick like different products, different countries and regions as well, to go to the new ones, just to understand like how it works there. The longest one from those three you mentioned probably is south of Iran. And this is pretty interesting. The process itself I mean, the technical side of the process was the fastest one of the fastest. But it took really a long time just to wait them to be ready, to be onboarded to the platform. They are really stable, and we have some mentions in Telegram from others that they like them from another platforms. They like for the long time they look pretty decent, and they had some alternatives, but finally still decided to go to the platform. Super happy. Listings are good. It went really well, and it was super simple because we have the similar product coming from Lithuania anyway. I mean, current Lithuania. That's from the speed perspective. And here I must say that one of the intentional things which I did this year was to put more responsibility and the more details involvement to loan originators morning manager. And my, checkpoint that it is successful is that I don't know all the problems and all the details while we are morning loan originators, because I have my stuff to do, and solving all the problems in the company probably is not the smartest way to do. So luckily, I'm super happy about that. The Simpleros and Virtus Lending was not my headache to that extent. Of course, I'm supporting guys, of course, helping to eliminate all the barriers, find money, funds to onboard them. But from my perspective, I would say that both Simpleros and Virtus Lending went very smooth. We did not have any major problems. Of course, we had to understand how Kosovo legislation is working. Always it impacts a little bit the legal part. We'll have to be sure that legally all the scheme is working, that it is enforceable, that the collateral is enforced. I mean, locally here. But from another side, super positive progress and how it went. Simpleros is a slightly smaller one, of course, as you see from the listing side, but that was again intentionally done. We wanted to have this super short product on the platform, to have it rolling like on a monthly basis, and they have really, at least it looks really solid plans how to grow, when to grow, and current volumes are like totally in line with the plans. They will be pretty slow, but they will be growing. And Virtus Lending is super successful onboarding, super nice guys. I really like the fact that the CEO came here to Estonia and he wanted like to keep it personal. And I see that those guys are like expanding, and we will be adding more entities if the performance, of course, is well and good enough for the platforms. But I would say that all three are super good, no major problems. And I'm happy seeing others running around, solving all the smallest issues there.
All right. Interesting insights. Thanks for sharing those. Now that you mentioned you took, let's say, a bit more of a backseat and you had others take on more responsibilities in this regard, have you adjusted or changed to any extent your screening and due diligence process for onboarding new lenders? Can you maybe comment on this?
Yes. The first part, yes, I switched a little bit what I do in the company. Finances took much larger part. We can discuss it a bit later, probably. But the process, the diligence and everything, no. And I guess we will never change it. We are super strict, sometimes ridiculously strict. I guess some loan originators, I mean, potential partners, pretty hate our process because we are we have this extended KYC, which kicks out the soul from the company, but we need to know everything, and we are digging really far. And DD requirements for the performance, we will never compromise them. I know it's slow, I know it's painful, but this is our promise that we are we are responsible here, and no, I will not allow it.
Now that obviously investors see the results, okay, you got 3 new partners onboarded last year. Obviously, many potential candidates didn't make the cut. Can you talk about the pipeline? How many platforms you were in touch last year? How serious conversations went? And at what point did did the conversation end? Is it something that where you felt like they might not be a suitable fit for our platform? Is it them bailing out because of other funding sources? So a bit more context to the ones that have made it to income this year.
Sure. My gut feeling is saying that we are declining 60% of the potential loan originators. Reasons are really simple. First check always is KYC. And if we see some weird stuff or they are just declined to provide, for example, passport copies of EBOs, of course, we just say, sorry, guys, when you're ready, then we are ready. Then the fastest discussions for sure are always for the smaller loan originators. ClickCash was a painful lesson. For sure, we don't want to see that happening again. If the portfolio size is slower than some threshold, we say, guys, please grow a little bit more. We are not declining you. Please come back in 1 year, and we will have another discussion. But smaller portfolios are painful for everyone. We spend quite significant amount of funds to onboard them, and then they are not growing.
Where does it start? Where's the threshold?
The loan book should be in between 1 to 2 million. Yep.
That's not too much to ask, I would say.
Not too much, not too much. And this is more the exception. The sweet spot is 5. We make those exceptions if we see the really strong product with really good perspective in the company, so performing already really well. Yes, it's not still, P5 is not that much again, but we are trying to exclude the super small ones. And discussions are always serious. We take everyone really seriously. From another side, we were limited in human power, and of course, we have to be really, really careful what we do and what we do not do. So we're declining quite a lot, but I believe this is a good practice. Plus, we have some jurisdictions which are by default will not be onboarded, which is easier for us as well.
And then the reasons why the potential partners then may reject income?
Oh, rejection of income. I remember, that before it was the case, and always it was the thing that income, you are too young or you are too small. We don't trust that. Last year, 2025, I do not remember any such cases, which is a pretty significant change.
To which extent does either regulation or, let's say, too small in terms of, look, we have bigger funding appetite, you can't meet our volumes?
Yeah. Exactly.
To which extent do those aspects apply?
Yes, volumes is the main thing. Before they were saying that we do not believe that you can have enough of investors on the platform, and we will not be moving fast enough. And regulation as such never was a showstopper. Of course, we risked quite a lot. And this year we had another refresh of the legal memorandum from Tegos, which was evaluating the overall business, our business, confirming that we are working according to Estonian law. And significant part of this document is evaluating the regulation in Estonia, how we fit there. Unfortunately, till now, still the situation is the same. Estonia is not ready with the regulation. We have huge analysis confirming that from the legal partner. When especially institutionals are coming, that's one of the first questions. We describe it, we say, send the document. It's all fine. They say, okay, we understand the situation. You cannot do anything. But I see that pressure from this year or the next year that we have to think regulation from the practical perspective to find alternatives probably and to go there because the level of trust will be totally different, I guess.
It's something that I wanted to discuss then for the outlook, but I feel like that can already count as a good insight into as far as this perspective goes. You mentioned ClickCash a couple of minutes ago. Maybe here we can also give just a quick heads up for investors. I know from last year, I think you paid 15,000 euro out of your own pocket. ClickCash itself didn't move a bit, so quite, business as usual, so to say. I think what's remaining is around 90,000 euro. How do you plan to proceed with those little remaining funds that are still in recovery then also for next year or for this year?
Yes. Precisely as said, business as usual. They try to relaunch the business. I don't see it's moving that much. From our perspective, we will remain committed to pay from our pocket. That was the promise. And since our revenue is still anyway growing from month to month, it's much better. It's better and better. My plan is just to continue and put it to zero. For sure, there will be periods like now of the larger developments. I mean, secondary market. For sure, we need to invest. We need to be careful where to put money. Sometimes you will see it will be zero for some periods. Painful. I'm not happy seeing all the feedback on Telegram for sure. We all are human. But from another side, this is my duty to be responsible here. Growth and platform stability is something which should be also taken like the most important thing. And if you would like to have slightly more numbers on the revenue side, or you will have like a separate question regarding that. I believe it's a really sorry.
No, you can go ahead.
Yeah. That's a really important indication. As we started, the previous year was the best one, and revenue based as well. Of course, we're waiting for the final accounting. It's not rock solid number, but the revenue was 690K, which is like 40% more than 2024. I consider it's a good result. We just need to proceed with the same pace and automatically ClickCash will vanish as a problem.
I wonder sometimes to wrap up the ClickCash topic, if it's, I understand it's like a very honorable move to take responsibility, take accountability and say, look, something got out of hand, but we're willing to pay from our own funds, which is honorable, but it kind of at this pace, it drags the topic around for many years and it always keeps being like, some obstacle that somehow or some a subject that is always somewhere in the mix, and we address it in the podcast once in a while and in the Telegram chat. And is there any update? Will there have any payments? As opposed to maybe say, look, we messed up. We just like write off. I mean, back in the day, you could have said like, look, 150K, it's not that much. I'm sorry. We learned from it and now we move on and kind of like cut your losses short to an extent instead of dragging this topic around. Do you ever have or have had conversations like this in the past to say like, look, maybe we just need to acknowledge that we kind of messed up in this situation. We can't really solve it now, but we take it on our chin. We don't have the clean sheet anymore as a marketplace, but losses maybe happen at one place and now we move on and just like be more efficient and allocate resources then to aspects that continue to grow the platform further and faster moving forward.
You're absolutely right. We had those discussions internally. How else? As you see, decision was made that we will proceed with that. Even if it's yes, trading our progress, making some problems. From From another side, it's not that a huge problem for the company to grow. I mean, we are paying to some months 5K per month. It's not a tragedy as well. Just sometimes it's a little bit harder to allocate. And from another side, personally, I don't want at all to see that investors are paying for this lesson. I rather prefer that it will be still longer. And another thing which is actually planned, and we will continue in the same approach how to solve this. We just need larger funding, and the last round was not the only one. The next one will be even larger. We have plans, we know what to do, and again, automatically it will conclude that yes, took time, but still we solved it in a good way for the investors.
All right. One last question before we try to see where the outlook or what the outlook is for 2026. Whenever I was visiting Income Marketplace in Tallinn, the team, everything, it seemed like a very wholesome, very like caring, dynamic, very like a lot of harmony in the air, very little room for like serious argues and debates. But I was wondering, like, if you look back to 2025, what would you say has been the most frequent topic that you argued or that you debated internally at Income Marketplace?
Good question from the perspective that I see really huge shift here as well. I mean, before we had a lot of arguments in 2024, and the biggest pain, of course, was the onboarding of the loan originators. We had ideas, we had a lot of trials there, but always it ended up not so well. And some, I will be transparent, some meetings were pretty sharp, like just because the result is not there and we will see that it's not progressing. Guys started a little bit to be not that caring and friendly, as you mentioned. Last year, it vanished as a topic as such. We see the progress, we have targets, we are moving, and guys are super helpful to each other. And what I like the most that when they see the problem, nobody's running around like panic mode. They are like forming smaller groups, finding solution and proceeding. Last year, the only thing which was like causing sharp comments, they're not sharp, no, but a little bit. Comments is of course the system, especially our support. I don't know how they survive, but sometimes they have a lot of emails about something which was broke. For example, now we have a lot of emails regarding Donarupia, that the repayment process is broken and still is being fixed. And today we should see like how it went. I really hope it will decrease significantly. And yeah, there we have those comments, but again, they're constructive. They're not blaming like, hey, what the hell, you like broke that or this happened. Vice versa, they're saying that that's the priority now. This is the pain point. Please, we need help here. And then process starts to move.
All right. Thanks for sharing those insights that, sometimes might feel like a bit uncomfortable, but I feel like any investor will understand that, there's just normal confrontations, normal debates that you need to have also internally in order to, find a good solution and common ground for specific topics and how you can resolve them moving forward. I feel like that's the most natural thing in any company that there is in the world, probably.
Very true.
All right, 2026. Income has already communicated a couple of targets and goals, what you want to achieve. Among them are the secondary market and the two-factor authentication, 2FA, make it maybe a bit more easier. And you want to establish both of them, maybe in parallel as well, by latest the second quarter this year. Maybe can you comment on the necessity that you see more on the investor side or on the platform side? And maybe then we can switch to some other targets as well.
Sure. Yes, as I said, still in progress. Aim remains the same, quarter one or up to quarter two. And those things should be done in parallel, or at least they should be rolled out at the same time. for the investor. And the reason is really, really simple. Secondary market will be having those discounts, meaning that if anyhow you crack into the system, you can sell cheaper loans to someone and you can steal the loans. At the moment, such problem do not exist as such because you cannot withdraw funds to any other accounts, only to your account, which came from the bank, and it's more or less safe. I don't see at least any possibility. So yeah, we remember the case with some platform. It was the case that the bank failed with the KYC and somebody created the fake account and some money was stolen from that. But here we cannot help anyhow in any case. So yes, those two things should be coming and rolling out together. And from the investor's perspective, we will always ask about those two things. Personally, I still see that early buyback somehow serving the need. You can quit your investment earlier, but still it's a fixed date in the calendar, like 1 year from now. Secondary market will be, of course, better liquidity. Yeah, biggest things for the IT, we are trying not to interrupt them too much. Of course, different stuff can happen. And again, for example, now Donna Rupee is taking their attention. For sure, we need to fix it. Then for sure, it's a burning issue. So yeah, we'll proceed. If something changes, we will let you know. But I still try to keep everyone focused that we need to deliver. And the promise was on the webpage for years, I guess. Now we need to finalize.
Yeah. How do you structure the secondary market in terms of maximum discounts, premiums? What will be the rules? Can you roughly talk about them? Will there be a fee implied as well?
Yep, we have maximum minimum. I still it's still being discussed, to be honest. What's the maximum minimum? If I'm not mistaken, it's 40%, but probably I'm lying here. Let's keep it for the team to have a final decision, and we need a bit more calculations. But for the IT side, it's changing nothing because they will have variable, which should be set up in the end. And fee, yeah, yes, fee will be there. Answer is really simple.
1%, 2%?
We will try to keep it moderate, not to eat too much from the investors.
All right. That's politically correct answer now.
Yes, I'm sorry.
What are other targets, maybe tangible targets that you have for 2026? Assets under management, for instance. Last time, turns out you were too ambitious, maybe. Doesn't need to be a bad thing, but do you plan on targeting 35, 40 next year? What's your aim?
First thing I will comment, still we have to be ambitious and targets have to be hard to achieve. Otherwise, I will not say guys will be relaxed for sure, but pressure should be there on me as well. This is my personal responsibility and saying loud. I understand that this is a commitment. Plus, I will comment still the last year if if not foreseen the Narupia falling and oversupplied Hovi Naibankar, we actually would achieve the target. Nothing happened, and we failed. Nowhere. It just happened like that. So by the end of this year, I would like to double the number, and taking that from the current 125. So I would be pretty happy to see that 50-60, which is a lot. Again, ambitious. But we have to achieve it. It's not like, wishful thinking and just hoping.
Yeah. Well, in this regard, what would help obviously is more supply, and here you already teasered. There's two new bigger lenders in the pipeline that you plan to onboard. What's the timeline here, and do you also have prospects beyond those two?
Timeline. Conclusion at the moment is Q1. They both supposed to be onboarded the last year, but it turned out that the legal setup is much more complex as we thought, which is not a problem. It just takes time. So yeah, I will park them in the Q1. I see we're already polishing. We don't have discussions like how we should work. We just have tiny things in the legal part. IT side for both of them is started or actually pretty close to be finalized. So no major problems there. And prospecting for sure. Those two are the most active ones, and they like preceded the farthest. Then next two currently are in the due diligence process. So when we have conclusions, then we are like again, as always, smarter here. By the way, the process itself, we have like two-step due diligence. And the first one is really, really rough, just to understand should we spend time there. And both of those loan originators already went with the second one, which is good. And as always, we try to keep the early discussions with two or three who could be potentially after that. So to keep the pipeline always alive. There are no reasons, to hold 100 loan originators in the pipeline. It's impossible. We tried. So current the process is like two really onboarding close to the end, two in DD, and two, three, some are like potential ones.
All right. Thanks for sharing this outlook. How about the financial situation? What are your targets in this regard? Do you want to become profitable on a monthly basis this year, or what are the KPIs that you try to target?
No, absolutely. The target is that we are profitable. Technically, to be honest, December last year was already profitable because we received the larger payment for the onboarding, and it already covered the burn, and we were positive this month. I will not be like holding that this is super positive because we have to be like profitable on this monthly recurring revenue from the platform fees separate.
Not from one-offs, yeah.
Yes. But we are super close. As you see, if we manage to close the gap with this one, so we are pretty close. We will be there like in around 30-35 millions of assets under management. Again, as always, it depends. Some months are larger in spending, so from the marketing perspective, some months less. Sometimes we have larger developments in IT and etc. And even reaching this profitability will mean that yes, we are earning, but still decision can be made that we will be spending each month more and more to grow faster, which is also reasonable. There is no ultimate target like to earn a super large amount of profit and not to invest it. It would be also pretty strange. Money or revenue wise, again, it's pretty easy. AUM is super nicely tied to the revenue. And if we are doubling AUM, then we are doubling revenue. And that's more or less target.
Do you plan, I think you mentioned already, another funding round this year?
Yes, we are in the early stages to prepare that. And the ultimate goal is to grow faster. And growing faster is supported by two pillars. The first one is, of course, the retail part, and all is clear there. And the second one, as already mentioned, is the institutional part. We need a separate focus on that, not taking out anything from the retail part, of course. And this question, I believe, will emerge. I would like to see those two things as a separate streams, supporting each other. And I believe everyone will benefit from that. We will be able to have larger loan originators from one perspective. From another side, I will be able to say that we have really decent investors. Please come to the platform, and everyone should be happy in the end.
And in terms of regulation, we also had a quick moment to discuss about it. Do you see any changes coming in 26?
So regarding the regulation, in Estonia, the draft itself is not changing at all. They started to prepare it before the war, and I guess the attention went to the war. It's not changing at all. But as I mentioned, we still need clear picture on that, how to proceed. So this year we'll be defining, are we chasing for the regulation in the neighbor countries or slightly far? And what will be the approach? This topic will be also tackled in the next round, funding round.
All right. So some movement is expected to happen, but that's kind of like the assumption pretty much every year. So let's see where we're going to be with this topic.
Yes, and this is complex topic. Internally, it will be quite a lot of changes from from one end, we already did evaluation, like what is required, document-wise, process-wise. We have the list, and thanks to some other platforms, they were kind enough to share like internal information how it went. We had those discussions. I see that more or less we're eligible already now. Of course, we need to change some things, and the most painful point will be if we go to Latvia or Lithuania, that we need to hire local people, meaning that more costs for the company. That's the only pain there. So it's like slightly larger investment, but I believe that in some point in time we need to do that.
I feel like that was a lot of interesting insights, very transparent sharing from your end. Thanks a lot, Lavrenti, for providing investors some very good information in terms of like what's happening behind the scenes at Income Marketplace. And then obviously best of luck for a successful 2026.
Many thanks. Really good questions. I also like felt total pleasure to be here to answer those. There are of course smaller things. Happy to answer like in offline. Some investors using that online opportunity to write me in Telegram, not a problem as well. Also hoping we will be growing. I see now we have huge supply, so I will use this opportunity, guys. Please invest. Virtus just listed 13%. Really good opportunity. But all in all, yes, we have plans. We have good team. Just need to execute.
All right, that's the way to go. Thanks for your time, Lavrenti, and then we're looking forward to see some good results of income in 2026.
Thank you, Denny. Have a nice day.